JLL released their commercial real estate transaction reports today. In studio with us to discuss the findings is Zandile Makhoba. She's the head of research at Lang LaSalle South Africa. Zandile, thanks so much for your time. This commercial report, whenever I think about commercial property, I think about these big industrial buildings, and then you wonder, how relevant is this? But tell us, what does this report tell us?
Okay, so the report really covers the investment in properties in South Africa. We looked at mainly the real estate investment trusts of the country and exactly which buildings they were looking to buy in or get rid of actually within the year. When we talk of commercial real estate, we're looking at your industrial as well as your office spaces, and then as well as your retail spaces. And we're interested in seeing where the trends are going, what property investors are seeing value in, and what really that then means for the future outlook of commercial real estate investment.
So what are some of those trends? I mean, people who are going to look at this report, what are they going to say, wow, that's interesting, we can use that?
Well, overall, given the climate during 2014, the environment was very uncertain. There was credit downgrades that the country saw. Inflation was high. We saw weakness in the rand, and that really creates a lot of cold feet within investors. It's interesting to note that the decline in investment was actually driven more by a lack of available investment properties than a reduction in buyers in the space. And that's really because there's nothing else to put money in, especially when the environment is a lot less strong. So especially office and retail, there was a decline in the values sold there. But the opposite was actually true for the industrial sector, which saw a rise in both the sizes of properties sold as well as the values in properties sold during the year.
Zandile, another piece of information from your report, investment in the office market in 2014, so last year, we saw a 68.7% contraction from 2013. It's just very interesting to note that point, because over the last couple of months or so, we've been seeing these office booms, especially around Sandton, and a lot of our market analysts have been interested about the popping up of office space. So is this a trend that's likely to continue, and would you be attributing it to the same issues you've just mentioned?
Within the office space, there's actually been quite a lot of developments like you've mentioned, and the slowdown as well is related to that. With a lot of investment going into the construction of buildings, there's also a bit of uncertainty about what will happen with remaining buildings. When tenants move out of the older buildings, there's also a rise in vacancies of office stock, and that decline puts pressure on rental rates in the office market. So that on its own can actually be an opportunity for investors, given that your higher valued properties are likely to be kept within the asset holders that have them at the moment. So you're looking at your C grade and B grade buildings being vacant and looking to be developed in other ways. At JLL, we have Tetris, which works a lot with internal spaces and how they can be better utilized for office use. So there's a lot of different things that can be done, and there's opportunities within that space.
Well, thanks very much, Zandile. Zandile is from Lang LaSalle.